here's my easy way of scalping the Forex market. I look at a chart and I ask myself if I think it's going to go up or down. And if I believe that price is likely to go up or down, then I buy or I sell. And then I just use a stop loss and a 1-to-1 risk reward ratio. That's it. Now, how do I make these decisions? Some people will be saying that it is trend trading. That is the one you trade with the trend until the trend ends. Or some people say it's reversion trading. If price goes really far in one direction, it's going to pull back at some point soon. So you just wait for that. Then price comes back. Some people will say that it is, the liquidity Wyckoff distribution, accumulation, smart money order block, liquidity, Wagyu beef, bullish institutional order block, fair value accumulation gap, trading entry strategy. And quite frankly, I can't use a strategy anymore just because my intuition and my experience is what helps me make decisions. I have quite simply looked at the charts nearly every damn day for the past 9 years. And as a result of all that experience, I can just look at a chart, say, I think that'll go up, so I buy or I sell. Stop loss and a 1-to-1 risk reward ratio when scalping. And I have slightly higher than a 50% win rate, which long term means that I have a predictable edge that will allow me to remain profitable. Over the past 9 years, I've traded mainly swing trading, but I've started scalping again because I've done scalping. That's actually how I got profitable trading, was scalping. And then I've done it intermittently over the years, each getting roughly the same results as I would get swing trading, but swing trading just takes less work. And so I just decided to just swing trade. But scalping is actually, it's a lot less daunting than what a lot of people will think about it. A lot of people will think scalping is incredibly hard. And you know what? To be fair, trading is risky and most people lose money. And you're probably going to lose money if you continue trying to trade. And you shouldn't listen to anything I'm saying because I'm not a financial services provider. I'm some bald dude with a beard who claims to have been trading for a long time who's yelling at you here in a YouTube video. And you shouldn't listen to anything I say. This is just for entertainment purposes, as they say. But even with all that aside, what I have noticed is that scalping is really not that daunting. In my opinion, it's actually quite easy. And I would even vote to just, I'm really going to kind of push the boundaries here. I would even vote to say that it is somewhat, in a lot of ways, easier than even swing trading. Okay. One of the main reasons for this is because you're only in trades a couple hours. And it's not like you're having to look at every single candle on the 1 minute chart. You're looking at the 10-second chart, trying to put together, the higher time frame 1 minute with the lower time frame 10-second chart. You're not having to do any of that. You're literally you're using a couple time frames in combination. Me, for example, I use like the 1 hour, the 15-minute, the 5-minute. It's generally just those 3 time frames. And then I'll ask myself, price just bouncing off a major resistance level on the 1 hour. And then on the minute 5, it's like kind of looking like it's like going sideways and it's not going up. So maybe it'll bounce here and then I'll just enter and then I'll put a stop loss above the zone, target below. And as long as I just have a little more than 50% of trades hit the take profit, my win rate probably sits around 60%. Some weeks it's like 90%. Other weeks it's like 50% or lower. But it averages out to be between probably like 60 to 65% or something like that. And the cool part about this is that I actually track these results live in my free Telegram channel. If this is your first time on my channel, I have a free Telegram channel. It's the first link in the description, and I'll probably put it in the pinned comment as well. But here, I recap all my trades. I show the befores and afters. And I don't call them live. I call them live in the group right here. It's a Nick's Trades group. It's these day trades that I call out. So this is where I actually call my live trades. But I show the recaps in the Telegram channel. That way you can kind of see what it looked like before and after. I share my analysis in the morning. So like I'll do some vague stuff like this, like USD JPY is looking good. And I'll put like a screenshot of this right here. And then I'll show you like what the results were like after I took the trades, right? So like on Friday, yesterday, we took 2 trades. One of them break even, one of them lost, one of them profitable. So it was a break even day. But I'll share like all these analysis and stuff like that. Like this was Euro USD. I shared this yesterday. I thought price was going to go up and then ended up spiking up. And again, I don't share the exact live entries in the Telegram. I have to charge for something. I don't sell any courses. I don't do seminars. I don't really do a lot of podcasts anymore. I used to, but I haven't really done that many. I don't really do anything except charge for a subscription group, or if you just want to watch me trade live and hang out with me on some live group Zoom sessions, because I do like group live trading Q&A sessions. We can only live trade there in the Zoom session. Then you can join the Nick's Trades group. It's a $250 per month subscription right now. But if you just want to follow them for free and just be able to see the results for free, just join the Telegram channel. It's free. You could be in there in like just a second. So just click the link in the description. You can join that. Now, here with these trades, I'm going to show you the trades I actually took last week. What I used to do is I would show like the back testing on the TradingView replay tool and model that. The problem is back testing has so many limitations and there's so many things that like in reality I wouldn't do, but I would do in back testing because, you know, you don't have to account for the spreads or the time of day or the session or whether it's about to be changeover or the weekend and all sorts of different things like that. Like all of that is just to model an approach, and I've done that before, and I'll probably still do that in some future YouTube videos, but I just find it's more useful to just show you what I actually did and show you like what I did live and like what the results were. So I've made a YouTube video right before this one that kind of showcases the previous trades I've taken since I started doing this last week. Today I'm going to start this video from where I left off. So we're going to go here. This was on December 19th. I've already recapped all these trades in the previous YouTube video, so you can go watch the one right before this one on my channel. And you can see that. But here's a trade I took. So Euro USD. Now, there's a couple reasons I took this trade. Firstly, on the higher time frames, like the 1 hour, price had a huge move down, right? This was like a federal interest rate decision here in the U.S. that caused the U.S. dollar to go crazy. USD pairs spiked up, and then the XXX USD pairs like EU, those went down. So we had a huge spike to the downside. So here's my first bit of crazy, astronomical analysis, right? Looking at horoscopes and stuff to figure out whether or not the trade's going to go up. Here's my crazy complicated analysis. It had a huge move down, so I thought, well, maybe it'll have a little bit of a reversion back up. That's where the trading idea began, right? You can oftentimes find this by just looking at a 1 hour chart and seeing pairs that have had big extensions in one direction, okay? You need an eye for this, meaning you just have to get some experience seeing it over and over again. I'm just telling you that was the first reason that I thought it might go up. So it went down. I thought it might go up. Now, the second thing that happened is price tried to bounce here, and then it came down a little bit further and refused to break the recent low. So whenever price refuses to break a recent low, especially after a big move to the downside, a lot of people call this a double bottom. Am I going to call it a double bottom? I don't know. I don't really care. I'm not interested in playing the linguistic rhetorical games and having all these dialectical discussions and walking on the tightrope of mental gymnastics to try to justify why I think price is going to go up or down. I just saw it went down, and then it looked like it was failing to go lower. Not only that, after it failed to go lower here and make a new low, price went up and it actually made a new high. So this all happened while I was asleep at night. This is a 15-minute chart. So price went up here, then it had a pullback here. Found support at this area, didn't break the low and had a quick lurch upwards, and then came back down here. So what I was thinking is that if price was going to go up, normally this pattern happens. It makes a new high, new low, new high, new low, new high. Then it comes back and it tries to make a new higher low before going up. That didn't happen right there. We tried to continue here and go to the upside, but that didn't happen. So it came down right here. And then after it came down, it pushed up again, tried to get past the recent high, couldn't even get all the way up there, but it just failed right here at this little zone that was forming. What I'll do is if it looks like price is bouncing at an area on the lower time frames as the zones get created, I'll just draw a little shaded rectangle and say, hey, it looks like price is bouncing here. That's it. It's not complicated. Everybody's going to draw different support resistance zones. I just draw the ones that I think make sense to me. But it's very simple. You'll see there's like nothing on my chart except for black and white candlesticks and then some shaded gray rectangles. That's the profitable millionaire trading strategy. Some shaded rectangles on a black and white chart. Couldn't be more boring. So I thought what price might do is have a movement back down here to these previous lows, just because we had the move down, we had the reversion back up, and then on the lower time frames, price started struggling to continue up and make new highs. So I just thought, okay, since we're failing to go back up, we should have gone up there. We pulled back all the way to the next previous low and tried to go, and we should have gone up there, but it didn't happen. It's still rejected. I kind of put all the pieces of the puzzle together, and I said, I think it'll go down. Now, even with putting all these pieces of the puzzle together, there's going to be around 40% of the time where I'm completely wrong. Like I get in, and it doesn't go to the profit target and it goes against me, right? So I'm wrong all the time, right? There's all the time where I close trades at a loss. They hit the stop loss. I close trades at partial losses. I close trades at break even. I close trades at partial profit. And of course, sometimes trades hit the TP, which happens, I don't know, maybe like a fourth of the time. Other than that, they're going to be something like, break evens or small profits or something like that, just to protect the risk. And as far as it hitting take profit a fourth of the time, I don't actually know that's true. I think it's probably it's probably like 50% of the time, 50% of the time it hits the TP. But the trades that end in profit are around 60% of the time. And of course, the losing trades. It's hard to calculate win rate whenever you're like closing trades early and calculating partial profits. That's why something that I do in this group, the Next Trades group, is I show cumulative P&L. I show what the result was for that trade after it concludes. And I actually show the screenshot of my trading terminal so you can see where I entered and exited and what the position is, and what the position size is, and the risk and everything like that. I show everything on my actual live trading terminal. A lot of these stupid idiots who run these little groups like this and they claim to call their trades, they just write it out like Euro USD buy, here's a stop loss, and here's like 3-5 different take profit levels, and you have no clue what's going on. I screenshot my actual trading terminal and I post that in there, and I don't even write anything, right? Because everything's there. The lot size, the entry, the trade, the pair, the time frame, the stop loss, the take profit, everything's there. And it just keeps it plain and simple. And if I close early, I call that out. Obviously, I put a screenshot and I say that I close it early. And then I'll put what the P&L for that specific trade was in terms of R, because it's 1 unit of risk per trade whenever I'm scalping and using stop losses. And then I'll put the cumulative P&L at the bottom. That way, if you join the Nick's Trades group, like 10 years from now, I don't even know if I'll be alive 10 years from now, but 10 years from now, say I'm still running it, or a year from now, or a couple months from now, you'll be able to see the cumulative P&L since I started calling my trades live for day trades, because previously I was just calling swing trades. Now I'm doing day trades and swing trades, right? It's crazy. So that's why I put the cumulative P&L from the inception of when I started calling the trades in here. So if we go back here to the 19th, you'll see this was the before. I entered this. We were just looking at this screenshot. I thought it was going to go down. And then you'll see what happened afterwards. What happened afterwards was that price had a movement down. There wasn't any drawdown on this one. This is very not normal. Sometimes there'll be sideways or a little bit of drawdown. This one just happened to go right to the profit target, and then that's that. So that was EU. This was a TP plus 1R, then plus 4R. So it was a good win streak this past week. Since I started it, I started calling my day trades about a week and a half ago. So far, we're off to an amazing start, and then there's a lot of really good trading opportunities looking good as we go into next week up until we hit Christmas, which it might be a little bit more slow, because we're here at December 20th, and I'm somehow still like just killing it, like even during the holiday period. Probably won't be trading Christmas Eve, Christmas Day, just because there's not that much movement anyway. And then if there's liquidity or movement in small spreads, then I'll trade. So this was December 20th. So this was yesterday. So USD/JPY, I thought USD/JPY was going to keep going downwards. Price was in a downtrend. It had lower lows and lower highs, and we were here at a support zone. So what I did, I did the great, grand, super amazing, intelligent idea of just selling at the support zone. Now, should I have waited for price to pull back? No, I thought it was going to break there. That's why I didn't enter. That's why I didn't wait for a pullback. Now, what ended up happening on this one? Price did actually end up, in fact, pulling back. So, and this was me just showing kind of like how I entered the trade. This is me just screen recording my actual trading terminal. You can see I'll put the sell limit thing right here, and I'll try to put it like close to where price is to see what the entry would be. I'll drag the stop loss line out, the take profit line out. One of you guys on the videos here in the comments actually showed me like, hey, Nick, you can just do that. That way I don't have to enter like a 0.1 lot size, see what the stop loss is, then add volume to that. So I end up being like 2 or 3 individual trades on one trading opportunity. This was me after I had already found what the lot size was. So this is me entering the trade. Then I drag the stop loss. You see it's $250 of risk. I'm going to be increasing my risk probably to like $1,000 per trade as we go into next year. And then there's a $250 profit. Then I enter it, and then I just screenshot that. You'll see me screenshot it here. Any moment now, you will see me screenshot this right here. Here we go. Perfect. And then what I do is I screenshot that, and then I go and I post it in the group right here. So you'll see as a screen recorded video of that screenshot. Right after I did that, I posted it. So this was what that screenshot was. I literally placed the trade on my live terminal, and then I show the screenshot of it. So then what happened in this one? So right, USD/JPY pulled back, like I said. It ended up barely stopping me out, not even to the pip. The spread stopped me out. Had my stop been just like maybe 1 or 2 pips higher, it wouldn't have resulted in a loss. I actually didn't even know it stopped out till I went and looked at the chart again when it was right here. And then when I found it was right there, I was like, oh, shoot, like this still looks like it's going to go and work. So after the stop out, I put USD or UJ stop loss minus 1R, cumulative P&Ls plus 3R. So then what I did is I called another trade. And again, I keep it so simple. Look at this. Yesterday at 10:19, this is how I call a trade. I just post a screenshot. So if you're here in the Nick's Trades group, all you do is you just have the notifications turned on. when you get a notification, I don't have this long list of like things like USDJPY is in a downtrend and we're seeing current US dollar bearish pressure because of the Federal Reserve and the policies and economic outlook. I don't do any of that, right? I just put a damn screenshot of the actual trade so that you can just see, okay, that's what he did. There's his entry, there's his stop, it's a sell order, there's his take profit, here's the pair he's on, there's the time frame, there's the lot size, there's everything. It's all there in one screenshot. It makes it super simple for you to follow. So I entered a sell right here. You can see this one, it was slightly different parameters, right? Stop loss was a little bit wider, but the entry was a little bit better. So the stop loss could go above the recent highs. And then take profit was actually a little bit closer. So this one was nice. What happened here? That was the before. This is the after. It just went to the take profit. So I lost this one, lost 1R, made it right back in the very next trading opportunity. Honestly, the first one shouldn't have stopped out. That was really stupid. But then again, you can't get around spreads, right? Generally, the stop loss will go above the most recent highs. So what I should have done, maybe if I could do anything, instead of using a 1 standard lot, I should have used like a 0.9 or some shit like that. And then I could have distanced the stop loss just a hair above that resistance zone. But, whatever. You could have, should have, would have, right? It was still a break-even day. Didn't lose money. So far, the cumulative P&L right here, since I've started Call My Live Trades, is plus 4R. And this is in about a week, right? I actually think it is a little above a week. It might be like a week and 2 days, or like, like how many trading days? Like 5 plus 2. So maybe like 7 trading days, 8 trading days, something like that. So, but it's a little over a week since I started, and it's up 4R. Get this. If I can just profit 2R per week on average, scalping, because there's roughly 1 to 2 trades per day on scalping. So it's pretty good, right? It gives you anywhere from 5 to 10 trades per week. If I can just end just barely in profit at the week, right? Plus 2R per week, that is about 8R per month. Now, 8R per month, if you're risking $100 per trade, that's $800 for the month. If you're just risking $100 per trade, and if I can just average 2R per week, and if you're able to actually take most of the trades as well, if you're in the next trade stream, that's $800 per month, right? I can't guarantee anything. I could go on a huge losing streak, and I will go on a huge losing streak at some point. I'll also go on a huge winning streak, like I did earlier this year, where I made a YouTube video about it. I made over $180,000 over the course of 6 weeks. Absolute insanity, right? Then I go on my losing streaks. Then I go on win streaks. Then I go on a break-even streak. And then I don't even know what the hell's going on. And then I go on a win streak and then a losing streak, and it's just all up and down. However, if it averages out to be around 2R per month, $100 risk per trade puts a person at $800 profit on the month. The subscription to the Next Trades Group is only $250. And again, this is not even counting swing trading. Swing trading, I call trades as well. They're just very infrequent because I wait for really good opportunities that I think are going to present a good risk structure. And then I just risk more on those swing trading opportunities because with my brain, my experience, I can predict a lot more than half the time where price is going to go if it's a swing trade. And I also use things like dynamic trade management to get out of trades early if they don't look like they're going to go to the profit target. So a lot of the trades, they're not actually losses. They're actually just break evens or like, partial losses, like a quarter of an R or half of an R loss instead of the full stop loss. Whereas the take profits, they're usually going to be anywhere from a 0.5 R to the 1 R profit target if it actually hits. But again, I'm more than willing to close a trade early if it doesn't look like it's going to work. So 2 R per week at the end of the month, if you're risking $100 per trade, it's $800. If you just double that, right, you're risking like $200 per trade. That's $1,600 per month, $1,600 per month if you're just risking $200 per trade. And if I somehow manage to get 2R per week, right, all the trades I'm taking of everything, if I can just squirm out 2R per week, that's crazy. It starts getting really crazy when you put big numbers behind it, right? When you start risking like $1,000 per trade, if you're able to do 2R per week on average pretty consistently most months out of the year, save for losing streaks and slow market conditions and things like that, that means that's $8,000 per month. That is 6 figures a year just trading Forex, right? This doesn't even count crypto or if you have like a stock portfolio, or if you got like real estate investment portfolio. This is just from trading Forex, right? Active trading. What matters is that the winners are a little bit bigger than the losers long term. That's all that matters in trading. If you have a set of profitable trades and a set of losing trades, you have to ask yourself, did I make more on the profitable trades than I lost in the losing trades? And as long as that statement is true, as long as it's like, yes, yeah, I did, then you're profitable. Trading Forex is pretty crazy. It's really, really cool. Another interesting thing that I'm going to make a video about at some point in the very near future is actually margin trading crypto. So like trading crypto derivatives, how you can trade those on the exchanges. Problem is I'm a US resident, so it's really hard to kind of get a crypto exchange to be able to like trade crypto on. But there's a couple of them that I've been looking at, kind of experimenting with and looking into. What I might be adding to Nick's Trades at some point, the Nick's Trades group on Discord, is I might be adding a way that people can start following my crypto trades, right? So I'll just go through a whole little thing about how I set up the account and how I fund it and everything like that. And then how I'm calling the trades on crypto futures. Those might be harder to follow. It's like dirt easy. In my very humble opinion, as a slightly intelligent person, it's dirt easy to follow my Forex trades because there's like no sort of obfuscating anything, right? It is a screenshot of the damn chart terminal showing the entry, the stop, the target, everything. And then that is just that, right? And you just look there and you can see everything in that one screenshot, and it's super intuitive and quick and easy. This also allows you to be able to follow my trades a lot quicker if you're trying to follow my trades. So I don't know. It's been going pretty nicely. But that is the Nick's Trades group. Now, what am I looking for as we go into next year? As we go into next year, what I found is USD JPY and Euro USD are the only pairs that I've been scalping because they've been really nice and sexy and super good. And as we go into next year, there's also some swing trades. For example, USD Canadian dollar. I was short on this and I closed this last week. This was the only swing trade last week. I might get 1, 2, 3, 4, 5 swing trades per month, right? Maybe not one swing trade per month. There's a time where that has happened earlier this year. However, it's usually like maybe like, I don't know, like one trade a week on average. I don't know, something like that. But this is the first swing trade that I've taken in a while. Like probably like the last 3 weeks. And I took this one. So it's USD CAD. You could see the stop loss was there. The target was here. The risk on this one was about $5,000. So like, I think it was $4,500. So what I did, oh yeah, here's where I called it out. I put finally a swing trade with these interest rate decisions that just came out. So this is what it looked like, right? And this is just a mean reversion, like overextension trade, a trade that like where it's gone really far in one direction. And I think it's really likely to have it collapse in the other direction, have a reversion. So I put the stop loss way up here. You see stop loss is like ridiculously far away, right? Like almost 200 pips away. I have position sizing that represents a $4,500 risk. And then I put the actual trading terminal here. So that's that. So this one, what ended up happening is it went a little bit into drawdown, then it came back, and then it started looking like it was going to go up because it had all these wicks. So I ended up calling a closure right there. You can see I put you can say I put USD CAD break even plus 0R, cumulative P&L plus 0R, because I just started calling swing trades like this using stop losses. I was previously using a DCA risk structure. What I've just found is like an equity stop works better because instead of putting all the money in the account and risking the whole account to try to grow the account using DCA, recovery trades, things like that, is essentially adding to losing trades with small position sizing. Every now and then there's going to be a big loss. I don't want to risk blowing the account because it will screw up all of the tracking of it here in the Discord group. And I want to be able to track everything really transparently as we continue running the Nick's Trades group. So what I'm doing now is I'm using an equity stop. What an equity stop is essentially saying like, here's a portion of my account that the moment my account reaches that amount of drawdown, no matter what trades I'm in, no matter what's going on, no matter what the logic is, all trades are closed and lost right there. So it's essentially like if you're using DCA trading, right? You're using swing trading, and DCA, again, it means dollar cost averaging. It's just adding to losing trades. You can set like a max risk. Like for example, when you're DCA trading, you're effectively trading with a negative risk to reward ratio. If you have a $50,000 account and you're trading DCA trading where you add to losing trades, there's no stop loss, right? So there's no exact risk structure unless you do something and you set a risk structure in place. So you're effectively risking $50,000 if you're not using a stop loss, and your plan is to just add to it until it reverts or blows the account, which it's okay if it blows the account because as long as you can grow a little bit more than half of them to the profit target, then it's fine. But whenever you do blow that account, there comes a time where you have to decide, okay, I'm risking 50K to make like, $200 or $500. You're going to win almost every single time. Okay. This is how banks work with loans. This is how casinos work with people coming to the casino and gambling. Every now and then someone's going to win. They're going to lose a lot of money, but they're going to have small, frequent wins pretty much almost every single time. The casino makes a little bit more than it loses. Same thing with like insurance companies, right? Insurance companies, they take a lot of premiums. They may be taking like, you insure a car, like one of my cars, like $100,000, right? They insure $100,000 for what? Like how much per year? Like 5K per year? So it's like, I'm giving them 5K per year, and they have that probability of making 5K because I'm probably not going to get in a wreck. And I've happened to have been lucky enough to never get in a wreck. So they look at my driving history and all this bullshit, and they're like, okay, we're going to risk 100K because we might have to pay him out for that car, plus medical expenses for people. So maybe like they're risking 250K to only make 5K, right? If they're right and they win and I don't get in a wreck and I'm a good driver and I avoid a wreck somehow, then they make 5K, right? But they risk like 250K or whatever it is that, the limit on the premium is to be able to make that 5K. But you doing this in trading, it is like you risking $50,000 in your trading account to only make $500 or $250 or something like that. And again, it works almost every single time. The time you have to worry about it is whenever it starts to not work and it starts to go against you. What I found out is more than 50% of my trades that reach more than a 50% drawdown of the trading account usually end up blowing the account. So it makes sense to have an equity stop there. I don't have an equity stop at 50% of the account. My equity stop is more like 10 to 15% of the account, and it kind of just varies depending on the quality of the trading opportunity and my personal discretion. But I'm using an equity stop so that way there's no possibility the account will ever be blown, period. That's it. But it is essentially still saying like, I'm going to wait for this to set up, and then I'm going to get in, and my only object is to just control the risk, right? Just to try to prevent the big losses from occurring. And then whenever the profits start to come, maybe like perhaps protecting the position, like, moving the stop to break even and then just crossing my fingers and hope it plays out. If it goes and hits the break even, cool, just wait for another trading opportunity. But if it goes to the profit, now there's very minimal risk because it started going to profit, the position was protected, and it keeps going. There's a bunch of dynamic fluid things to do. There's no exact thing that I do. It's all very dynamic, very nuanced. It just requires you to just look at the damn chart for years and years and years and get experience seeing price action and kind of getting into the ebb and flow of it. That's what I do for swing trading. So it's very similar to scalp trading in the sense that I'm taking the trades, figuring out what the risk is, watching them, making the best decisions that I think is possible, trying to keep the winners a little bit bigger than the losers, things like that. So I've started this account. You can actually see, so it's been a month since I started this account. I haven't placed a single trade on it. It was $100,000 deposit, and I guess they paid me an interest payment. Forex.com. Thank you guys for the $89 interest payment. Really appreciate that. So there's that, and then here's the USD CAD trade. So it was actually a little bit of a profit, but again, this is risking $4,500 to close it in like a $266 profit. That's not a profitable trade. That's just a break-even trade. It just happened to be a little bit of profit. So that was, that's the swing trade. So this is pretty cool. Again, if you want to follow these and want to see the results and stuff, just join my free Telegram channel for a while. Join it for a week, a month, a year. Just watch me post all my stuff in there. I've posted all my results in there since 2018. Because unfortunately, we live in a niche, which is the Forex trading niche, where almost everyone is full of trash. And the only way you'll know if someone is not full of trash is if you watch them trade live. Nothing else tops that. Because if you're watching someone trade live and everything is time-stamped, you can see it all, you'll see someone go through really shitty losing streaks. And you'll see someone go through triumphant, glorious, brazen win streaks. You'll see break-even periods where things are slow. Every single profitable trader that I personally know of usually doesn't have a profitable month every month out of the year. They average like 2 to 3 down months per year. That's me. I average 2, 3, 4, 5 down months per year, right? Whether they're break even or down months, right? It's just not a profitable month like 2, 3, 4, 5 months out of the year. However, as long as you just make a little bit more than you lose long term, you allow yourself to have huge winning months that wipe out all the profitable months with tons of profit. Or maybe I shouldn't say tons of profit, but with a decent, reasonable amount of profit that's significant enough to allow you to continue to be predictably and consistently profitable long term. This is the reality of trading. People on YouTube who you see saying, like, we're going to grow a $10 account to $10,000. It kind of feels weird for me to like talk down to the intelligence of people who think that that is true and think that that's amazing, but I'm just being real. Think it through. Like, you're seeing crazy crap of people saying I'm growing $100 to $100,000. I'm growing $10 to $10,000. I'm not throwing shade on anyone in particular, but what I'm just saying is you need to be realistic whenever it comes to approaching trading. Most people, even professionals, right? They may get like a 20% return per year on their total trading capital, right? I myself float on average, with the exception of this year, between like 10 to 20% per year on total FX trading capital. And that's just the capital allocated to FX, right? I've got a third of it allocated to FX. I have 2/3 of my capital allocated to crypto and then equities. So it's like 1/3 in crypto, 1/3 in equities, and 1/3 in trading Forex. And of the money I trade Forex, I only trade with a small portion of that capital I have allocated to it, just in case something crazy happens and I blow an account or something. So with that said, that's the way I approach it all. I really just want you to understand that scalping is really not that evil and nightmarish and like a hellish of an ordeal as you may imagine it to be. Scalping for me has actually been quite peaceful, just because like I do the analysis, look at the chart, I enter the trade. The candles are not flying all over the place, right? They still get painted one by one. And if you're looking at the 5-minute and 15-minute chart, in the 15-minute chart, you're having like 4 new candles painted per hour. On the 5-minute chart, it's, however much. I'm not doing the math quickly in my head. They don't, it's just like, it's the same thing as you looking at a daily chart and you're like, okay, there's a high here and a low here and I'm going to do this and I'm going to enter this. And then if it goes here, this is good. And if it not, then I'm going to DCA or stop out or something. And then you watch and it takes weeks to play out, right? My average swing trading duration was about 2 weeks. My longest swing trade I've ever been in was the USD CAD trade that I lost a couple months ago, which was 1 month and 3 weeks, right? This is almost 2 months sitting in a trade, and a trade that did not return a profit, a trade that I in fact lost $30,000 on. So whenever it comes to that, like the previous 2.5 months, I had made $41,000, and then I lost on that USD CAD trade $30,000, then another like 6K on NZD USD. But still, like I still technically came out on top and still made a little bit more than I lost, and it's kind of cool. So it is what it is. But whenever it comes to scalping, you don't have to be in trades that long, right? Most of my trades, if you go review my personal data, which you can, like all the history is there in the Nick's Trades group, regardless of whenever you join, all the history will be there. You can even see the full history from this whole year, all the way back to the beginning of the year when I started the Nick's Trades group. You can see all the whole history, literally every single thing, like time stamped and date stamps and everything. What you'll notice is that whenever I am actually trading, the trades take generally a couple hours to play out. I think the quickest one was like 10 minutes. I think the longest one was like maybe a day and a half, right? So it held over in the session changeover. And then the next week or the next day ended up hitting the profit target. But what their average duration is like a couple hours, like 1 hour, 2 hour, 3 hours, 4 hours, something like that. That in my opinion, like going to bed almost every night, not having a trade open, that is a very suspiciously addictive feeling. That is very nice. I really do enjoy it. Being in a swing trade, waking up in the middle of the night, it's 2 a.m., you go to use the bathroom, you get back, you see your phone sitting there on the table next to your bed, and you're just like thinking, should I check USD CAD? I mean, well, am I going to be making a decision right now? It's 2 a.m. I'm standing here butt ass naked, or I'm in my underwear. Am I really actually going to be opening up my phone and like making a trading decision if USD CAD is doing something? Then you start telling yourself like, nah, this is fine. Like, I don't need to check it. I've already got the stop loss in place and the target, and it's going to be fine. And then like you're laying down in bed and you try to get comfortable. You close your eyes, then you open your eyes and you're like, but what if I could just close it right here if it looks like it's going up? So then you look over at your phone, you look over at your partner who's sleeping next to you, and you're just like, I don't know, what should I do? So you like kind of lean over like a drug addict and you reach for your phone and you're holding it down beside the bed. So that way, if you're sleeping with someone, they can't see the light from the phone. You're like looking at it and then you're like scrolling the USD CAD chart. You could feel the adrenaline start to surge. And it's like someone came and like stuck a needle of adrenaline and cortisol and norepinephrine in your body. And you're looking at the phone and you're like, okay, I'm going to open it. You open up MetaTrader, or you open up your, Forex.com app or whatever app you're using to trade with. And you look and you see, boom, it's in drawdown. It's negative. It's 1/4 of the way to the stop loss. It's at a big bullish candle. There's been a news event. So you start going through all these mental gymnastics of like, maybe if I close it right here, I can just re-enter later in the morning whenever I wake up. And then when I enter in the morning, it'll be fine because it'll be at a better price. And then you close it right there. Then you wake up later in the morning and it would have ended up going into profit. But now you can't add to the position because it's already started to go into profit. And so now you're going to be losing money if you do that because you're going to have a wider stop loss, use a smaller position size, have a bigger profit target, and it screws up the whole risk reward settings that you already predetermined. And you did all of this because you were swing trading and you decided to check your phone in the middle of the night. Guess what happens whenever you're scalping? You're not in any trades. You don't even have the desire to go and check the market and see what it's doing because you're like, I'm not going to be trading right now. It's 2 a.m. I'm half asleep. I just went to the bathroom. I'm just going to lay down and go to bed. I have no trades to take. There's literally no reason to even check my phone right now. And so you go to sleep and you wake up in the morning. You're very well rested because you weren't worried about your trade all night long. And then you start trading. And then you get into a trade. And then an hour later, it ends in a stop loss. And you're like, okay, yeah, fair enough. That's the day. You don't see any other opportunities. So you go. Next day you come, you take 2 trades. Both of them hit the take profit. The next day comes after that, you have 1 loss and 1 profit, right? And so you're break even. You get to the end of the week, you take only 1 trade, and that's a profitable trade. You ended out the week plus 2R, if my calculations are correct. And you did all this without having to be in trade so much time. And you also did this like not having to really predict big moves, right? You just have to predict where price is going to be like in the next few hours, right? Instead of having to predict where price is going to be like a month from now, or 2 weeks from now, or 2 months from now, or 16 years from now. You're going to pass down these trades to your children who they will have to manage them and somehow dig themselves out of the hole of swap fees that you've left them with for the trade. There's all sorts of different things that you can do when it comes to scalping and swing trading. I just think scalping presents quite a unique opportunity, particularly in the Forex market and particularly in indices and futures, which I don't trade. I just trade Forex in terms of scalping. But yeah, it's actually pretty cool. So that's why I think scalping is easy. when compared to swing trading, in my opinion, not financial advice. If you enjoyed this video, we have this little cute thing where if you actually somehow manage to get to the end of the video, you've listened to me rant, you've listened to me give all these crazy little situations and examples and like fun little stories about you like being asleep at night and checking your phone, things that we all have done at some point in trading. If you got to the end of this video, let's do the number 420. I just picked that completely randomly. Just use the number 420 in your comment. Don't put it at the beginning or the end. Figure out a way to work it into your comment. Just the number 420 altogether. Work it into your comment in a creative way, because here's what I do. For everyone who gets to the end of my videos and leaves a comment and includes the number that I say here in the end of the video, I actually go to those comments and I'll heart them all in the first 24 hours. Usually, sometimes so many of you comment that like I'm unable to like see them all, because I'm just baffled that this many of you actually make it to the end of the video. But it's always cool when I see you guys, make it here to the end of the video and you put in the little 420 thing. So if you do that, work it into your comment in like a creative way, like a fun little way. If you need inspiration, go below the comments section right now and see how other people have done it. And I don't know, y'all are super hilarious. It makes me laugh, like reading some of y'all's comments. And if you have a question as well and you want to put it in there, then ask me the question as well, including that number in there, because that way I know, like, I'm just talking to people who have made it to the end of my videos and watched the whole things. That way I can help them the most. And they've taken the time to give 2% of a shit to just watch the whole video for free. And then I can actually help you in the comments, and I'll help you for free. As long as it's like the first 24 hours of the video. And if it's a question I believe I can help with. If not, if I don't think I can help, then I'll just heart the comment. And then if you want to follow my trades live, I really recommend that first you just join the Telegram channel, see it all for free. And then you join the Nick's Trades group, my Discord subscription, because those are a lot more fun. You get to see every single thing live in real time with like nothing left out. And you also get to join the live sessions that we do every day. Like, that's a lot of fun. I've done almost every day last week. We did live trading sessions, some of them lasting anywhere from like 2 to 3 hours most of the time. Like usually 7 a.m. Central Standard Time here in Texas is when I do them, because that's when it's New York sessions. I've woken up, I've had coffee, I've been able to get awake, and then I can start trading. So they're usually 7 a.m. Central Standard Time on most days. But those are fun because we all get to hang out. People get to ask questions. You get to see me trade live, right? Even though I call my trades, I still post them in the Discord group, even when I'm on the live sessions. But you actually get to see me do it live, and you can ask questions if you want to see how something was done or watch how the trade was planned and as it's set up. And you could see me saying, okay, UJ is coming up here, and I'm going to wait for USD/JPY to do this, and then I'm going to probably enter if that happens. You get to see the whole process live. And that's fun, and that builds the experience the most quickly. So I really recommend you joining the Nick's Trades group. Though I can't guarantee you anything, I can guarantee you that you will get access to the exact group that I showed you here in this video today, and maybe you'll enjoy it. I don't know. If you liked this video, that's amazing. If you liked the video, that's great. If you did like this video, and if you wanted to say something in the comments, that's cool, awesome. And if you want to subscribe to the channel, then you don't have to. It's whatever. It's up to you. You're an adult. I'm not your parent. And I'll see you in the next video. So have a good one. Cheers.